Yes Bank and CNBC-TV18 present the Growth Summit Vision for a $10 trillion economy in association with Max Life Insurance.
Ladies and gentlemen, thanks very much for being here. My name is Prashant. I work with CNBC-TV18. The topic given to us today is kickstarting private investments, risks, rewards, and requirements. And I think it's a very opportune time to discuss this because we just had the government presenting the union budget. For the last almost 10 years now, the government has done the heavy lifting as far as spending on capital infrastructure is concerned. Rails, roadways, expressways, ports and whatnot. But this budget was a little different. This budget essentially had the government slowing the rate of growth in terms of what it's allocating to spend on capital expenditure. I'm talking about the coming year, which is FY25. So if you look at railways, if you look at the housing, urban infrastructure, roads, I think the growth in FY25 as compared to FY24 is in single digits. That's uncharacteristic of what we've come to expect of this particular government. The question then arises, is the government now looking to the private sector to pick up in terms of their spending on capital expenditure? And is the government really looking to see that in a very big way? We've been waiting for this for the last many years. As I said, the government has given the lead and are conditions ripe for the private sector to do more in terms of spending on all of these areas. To discuss this, I've got a very esteemed panel. I've got Mr. Vineet Mittal. He's the founder of Avaada Group. Vineet, great to have you with us here. Thanks very much.
Thank you.
Siddharth Shah is, of course, founder of PharmEasy. Thanks very much, Siddharth. Great to have you with us here. We have Mr. Thiagarajan, who's managing director at Blue Star. And we also have Mr. Harsha. He's CEO and board member at IndiGrid Trust. Thanks very much, Harsh. So let's kick this off with a simple question. Are we waiting for the private sector capex to pick up, or is it already picked up? Is it already started? Vineet, why don't you start?
Thank you, Prashant. I think private sector, which was in cautious mode a few years back with everything around us, and then pandemic came in where capital preservation was the mantra and to survive the pandemic. And but if you look at in 2019, the private capital formation was in negative 4%. To if you look at last year's statistics, is around 16% growth. So I think private sector was sitting on fence, but with government's continued focus on building infrastructure, spending heavily onto the capital formation. Last few years were growing at the rate of 27%. Even this year it's around 10%. So government has not decreased the focus. It's an interim budget. So post-election only, I think we would can really say about the government's intent. But when we are going into the meetings and talking to government and stakeholder, their focus has not slowed down. Even in the green sector, they are awarding $1 billion contract almost on a weekly basis. And those investments are done by the private sector. So
in your sector, it's obviously boom time. So renewables, right?
Yeah, so correct. So it's if you look at energy transition at large.
But it's a sector, it's doing very well. But it's a broad base, what you're talking about, which is private capex, which is already picked up.
So we are seeing, like, say, for example, if I just talk about my industry, earlier I used to get transformers in 4 months. Now it's taking me a year to send them advance and get those things delivered. So now everyone in my supply chain, even Blue Star is sitting next door. Many of my items they supply, and they are not able to do delivery in 3 to 4 months. The supply cycles have increased, so they are now obviously expanding because they are seeing consistent volume coming. So it's not cyclical demand. So we are seeing across the sector, people who are sitting on fence, they have started doing the capex. If you look at the PLI,
Vineet, hold that thought. I'm going to come to PLI. Mr. Thiagarajan, I know also wants to talk about PLI. Mr. Thiagarajan, simple first question. Has it already started? And are we seeing the first signs of it? In what shape and form has it started?
It has started in an extraordinary manner. huge developments are taking place. Like him, there are so many customers. I see that in manufacturing sector. I see that in the data centers. In fact, it is happening more in manufacturing than services sector, is my view.
But is it narrow or is it broad-based? I'll tell you why I'm asking. Because if you look at the capacity utilization data, which the RBI puts out, the last number we have is for June of last year, June of 2023. That number is at about just under 74%. Typically, where that number hits about 80%, 85% is when the private sector feels the need to invest.
My personal view is you have to look at from where we are coming. We were in an era where asset-light model, and in manufacturing, China was an easy route. And I will go to the extent of even exaggerating and saying we had forgotten manufacturing, many sectors. Now, to kickstart, it required many things to begin with. First thing is mind shift, whether India will grow, demand will be there, not there. Second one is connected with whether PLI will be made available. Third is whether import restrictions will be put in, tariff, non-tariff barriers. So you go around and take a long time, so that is good, but eventually it is happening. It is happening at a faster pace in some sectors. It is happening in a normal pace in many other sectors, but it has arrived. And like in my industry, the manufacturing capacity is doubling in 18 months. Market may not, and but it has happened with so many other things.
A lot more competition, which it also means.
So
which is a good thing. I mean,
it's a good thing, and I am of the view this PLI will be diluted in the pricing. It will go to the consumer because production-linked incentive scheme is a wrong thing. It is a sales-linked incentive. I have to show incremental growth in order to earn. Eventually, what is going to happen? We will dilute that in the prices. It will go. Many analysts may be adding this PLI as a bottom line. It is not going to happen.
Harsh, you want to comment? I mean, yours is also a sector which is going through a boom time for renewables and now for thermal, on the thermal side as well. So
on the renewables and transmission, but I think the private capex has already picked up, and it's a cycle, right? The government capex was higher. The objective is not to keep it high. Objective is to eventually sow the seeds for private capex. And I think, I would say not now, a year ago the private capex has started. And I think what Vineet said in terms of supply chain is issues are faced across sectors in renewable, especially in transmission, where the manufacturing companies are taking time to expand. The investments will happen. Meanwhile, the energy transition is playing out across the world. So they are preferring to export to Europe and US if they can and get better realizations than really sell in India and compete. So unless and that's the thing that's going on. So the capex has already began because the market is not only India for them. The market remains a global market, and we are becoming competitive there. So certainly it started.
And it's not just transmission. It's you're seeing that across some of the other
impacts. So let's talk about renewable energy. It impacts solar PV manufacturing. It impacts wind turbines, it impacts transformers, it impacts battery, backward supply chain, it impacts, it's the entire value chain. What we are looking at is a surface, but the entire supply chain will cause boom in finely till base metals. Right? So it's the entire value chain which is booming.
Siddharth, why don't you chip in? I mean, you're not into power plants and transmission lines and solar manufacturing, but you're someone who started, entrepreneur, you put up a business. What's your perspective on this in terms of whether, what are you seeing out there in terms of investments and capital which is coming in?
I think, at least speaking on behalf of what I would like to call new age companies or digital companies, I think the investments from our end were always very high. I mean, on a lighter note, I can just that people are always saying that you guys are burning too much money and just investing much more than required, right? So I don't think that there's ever been a challenge and, anybody should question us whether we're investing, right? The question is, are we investing more or less? But I think what you're seeing on the ground is that along with all of these hard assets, I think, and Arundhati ma'am made a point sometime back that there's a phenomenal investment happening in digital assets. From the base telecommunications and your 5G and 4G rollouts to the services and technologies that that go on top of it. I mean, if I give an example of our company, without owning a single pharmacy, we can still service 18,000 zip codes because I can digitally partner with 100,000 existing pharmacies. Now they have challenges in their supply chain, which we are using our back-end investment in supply chain, but without creating a last mile, using them as transshipment hubs. And I'm seeing that happening across the board. In every industry, or affordability or access, transparency, quality of last mile delivery of your basic products and services is actually going up by several notches and miles. And, you know, we often keep joking with some of our peers who went to the US that we perhaps have an app for or a digital service for everything in this country, right? From, you know, getting your shoe polished to getting your hair cut to buying a house to buying a car. There's nothing that you cannot do on the digital economy today. And it's affecting everybody, right? From your 1 rupee UPI to someone who wants to buy, you know, a multi-crore rupee house. So I don't think that there's any holding back of investments in the digital economy, and perhaps that's going to be a big catalyst for all of the consumption and the economy itself to go ahead, which will ultimately then feed into this hard assets also growing lock in step with those.
Absolutely, and the way that we all consume things is completely transformed in a short time span, right? In the last 4 or 5 years. Let's come to PLI now, right? One is, of course, waiting for the for demand to pick up. Mr. Thiagarajan and Harsh, you also chip in. And the other is import substitution. And the government has been big on Make in India. Why do we need to import all this stuff? Why can't we make it in India? And it's shown some phenomenal results. How big is this going to be to propel sort of the private investment cycle in that sense?
So from our perspective, we can share that during COVID, in addition to Atmanirbhar Bharat, the biggest challenge which every country faced is the reliability of depending on a single country for your supply chain, and our dependence on their ability to jack up the price and the logistics price. So like I used to pay today $600, I was paying during COVID $10,000 for the same container. So the whole cost dynamics was changing, and that made entrepreneurs, industry, governments across the world realize that is it worth becoming so efficient that you are sourcing part from the best location in the world. And India capitalized on it. They launched this program for production linked incentive, and the external environment was very conducive for that. US and Europe were already fed up with contract renegotiation, non-supply of goods, over dependence on single country. So they started reaching out to manufacturers saying, are you ready with this product range? How are you cost competitive? And government actually made us competitive also because of PLI, and then topping it up with the state level incentive. And if you combine both of that, my sense is it's almost 6 lakh crore incentive has been given by the state government and federal government, and those would lead to almost 30 lakhs plus crore of investments into different sector, and that's going to transform many things. Like
Vineet, has it been a little slow though, the pickup? Because I mean,
so it's a sector-wise, sector by sector.
Yeah.
There are some sectors where the pickup is very, very fast, and they have already they were designed to serve the Make in India, but they have started Make in India for US or Make in India for Europe is happening. And in some sectors, there is slowness. There are some states which are not as good on ease of doing business as others. There are challenges we are already seeing on the power supply side. One of the northern state started telling that 2 days in a month we won't give you power and you have to run on the diesel generator. So we are already seeing some challenges happening, but I feel quite optimistic about it. Like we were sourcing almost 65 to 70% of our capex of close to 10,000 crore plus from outside India, which in next 18 months almost 95% of it will be sourced locally.
Okay.
So I can see that if I am able to make that much of change, and when I'm talking to all my suppliers,
Right.
they are all ramping up.
Okay.
And that's what convinces me that PLI in short and long run both will be a change agent which will probably change India's, still we are at 13% of the total GDP's
Right.
manufacturing.
Hold that thought. Let me just get Mr. Thiagarajan. Mr. Thiagarajan, in the budget, for example, this time has allocated, the number which they gave you, you called it not PLI, but SLI.
That,
Right?
No, it has to be, it is PLI. Still, we have to remember, it is not paid on the production.
Correct.
It's
On
paid
sales. No, my point is the budget provides 15,000 crores.
That's right.
To be paid.
Yeah.
Does that, how should we read that? Does that give an indication
No,
that...
they have been pushing us. There has been follow-up from the government, please complete the project and claim. And it is taking time basically because even the project execution is getting delayed. We are still dependent on manufacturing equipment quite a bit from outside the country. And when everybody is expanding, it's taking time. And most importantly, I don't think we have enough manufacturing professionals at all. And it is a huge shortage we are managing by poaching. And
Eventually you'll run out of people. Unless you have new trained people.
It's already, I keep saying, sales and marketing people were pampered over the years. Now manufacturing, the other area is R&D. When you don't have scale like China, if you have to compete, you need to invest in R&D. It's a pathetic investment that has taken place. So manufacturing has to be seen with not only the capital needed, but also the research and innovation has to go in hand in order to compete.
The topic says risks, requirements. Does anything need to be changed? Or the schemes are perfectly fine from the government side, what is announced?
First of all, I don't think we should depend anymore on the government. The question is like air conditioners. By 2050, India will be the largest market in the world. And today it is the fastest growing market. If that is so, we all should go ahead and participate in this by doing what we have to do. There is a Kickstart PLI is already there. And most importantly, a product like this, many products are huge carbon footprint products. So we have to keep in mind the net zero goals as well. This growth cannot take place without investing in that. So therefore, R&D and manufacturing, there is a strong business case. So we have to go ahead and do. The only thing is that the cost of capital is high. There is a gestation period. Ifs and buts will be there, but we have arrived. That's what I believe.
But on that note also, maybe things will ease. We have, bond index inclusion, a lot of foreign money coming, interest rates perhaps, hopefully will go down, although the RBI did not cut rates today, but hopefully in the future it will come down. Cost of capital, which is an important input, as you said.
The bank is there anyway.
Harsh, your thoughts on this?
I think, see, it's a cycle. And we are at the beginning of the capex cycle. To expect that we are going to reach peak is not possible. So all the green shoots are there. And like everything else, we are two Indias. One India is driven centrally. The right policies are there, the right noise, right incentive, capital. All of it is great. But eventually, these are big projects that need to be executed on ground.
What are the challenges?
They need to be executed on ground. So the state policies, land acquisition, labor reforms, that is coming in the way in terms of speed of execution. You may want to put a 20,000 crore factory, but it's not easy to really put that in a year in India. Maybe it is in China. So that part, which is the implementation of the capacity of whichever plant we talk about, is going to take time. And I'll give you an example from our sector. Government assumed that we'll have in 1 year all the solar capacity ready in India. So we put a scheme to kind of, only buy Indian modules. But it didn't happen. The capacity struggled in 2022-23 because the manufacturing capacities didn't come in time, because the supply chain took time. So real hard implementation is going to take time. The good part is it's just a spillover, right? So maybe not this year, maybe next year. It's not going away somewhere because you are seeding the right seeds which are going to become trees in future. It may grow a couple of years later, but it will grow. So I would say the private capex seeds have been sown. It will grow. maybe a year later, but it will grow. So I'm pretty optimistic on that. But yes, we are two Indias. Implementation takes time in whatever we do because of our social structure. We are a democracy, a complicated democracy. So it takes time, but I think we are doing things the right way.
I hope so, because I mean, if you look at the new project announcements data, Harsh, right? I was looking at the numbers for the last 9 months. That number is not a pretty picture. I mean, it's at I'm not, and we're not sure why that is the case. Because as you were saying, the impetus is there, the government support is there, and something needs to come together. Or
it's a skill gap, as he mentioned also. Skill gap, social issues, regional issues. So we are, as I said, a complicated democracy. We are not a homogeneous country, right? So it takes time to implement these projects, but it's still done in a democratic way, which is great. So that's why I'm optimistic that it will eventually take place. Maybe a little later, but it will take place.
Mr. Thiagarajan, you want to add to that? Or one thing I noticed, and I'm not sure if that's correct. 10 years ago, 15 years ago, you used to have these large, lumpy, big projects, tens of thousands of crores. Now it is, I'm not talking about any particular sector. It is smaller sized sort of contracts, which is actually not a bad thing. I mean, from various sectors. We speak with companies like Thermax. I mean, we speak with you all the time. So it's more sort of disaggregated in that sense. Is that?
I don't think that is going to help to become globally competitive. We were all used to, like gypsies move from Dadra, Silvassa, Jammu, Sikkim, wherever this 10-year, tax concession or some excise duty rebate is there. If you want to become competitive, you have to look at scale. It should be large facility. And that's how you will compete. The issue is the cost of capital, and we are impatient in that within 2 years, 3 years, it has to pay back like that. Then you look at sectors like his, where returns may be very high and faster.
Who are you talking about? Sorry, you're talking about
both of them.
Both of them. The other advantage, Vineet, of course, has is that he's not listed, so there are no compulsion. Nobody's going to get on a call every 3 months and ask you, why are you investing, for the next 10 years, Vineet?
Actually, whether you are a private or publicly listed, the accountability and governance framework now is more or less similar. We have investors like Brookfield and PTT Group of Thailand, and they themselves are listed. What I'm seeing is the investors' mindset have changed. So they are not only looking for yield, and when they are valuing you also, they are valuing for IRRs which you make on project, but they are also rewarding you for the growth. So it's a yield plus growth play in across different sector, and they also actually look at that our currency is not stable and it's going to depreciate 2 to 3%. But is your growth much more stronger, and you have larger market needs to address. If you look at, I look at very closely nowadays procurement, because we are seeing supply side constraint almost in every space. Because a lot of people still don't trust India's story. There are baggages from the NPA and bankruptcy courts and IBC process, which is actually stopping people from debt-led growth. So they are saying we will wait, we will earn and then grow. So I do my partners meet twice a year now, and one of the reasons they are saying we are hearing similar stories from top 10 of you, but we don't want to do capex. We are happy making 100 crore. We don't want to multiply. We will use the same well to grow because of the way the regulations have changed. Governance have improved a lot more, and I think the culture by and large in India is improving, where people are saying, if I'm going to borrow from the bank, I'm rather be sure about my ability to pay even in the worst case scenario. And that's, I don't think that's wrong. It's being more responsible and prudent and creating an economic system which is long-term sustainable.
Siddharth, actually, let's do one thing. Let's do a round asking. I'm going to ask each of you, what would you like to see from a policy perspective, from a government perspective? What would you like to see which you think will be the biggest sort of driver for private investment? in the country?
I think again, coming from the perspective of the digital economy, I think government is keeping pace with new innovations, right? I think by definition, you will not be able to create legislation before innovation, right? So that is the very basic tenet of where we are. I think as an industry, we also have to realize that every innovation that we do will not necessarily fall within the confines of legislation. So we'll have to be nimble to adjust to that. I think so long as there is a healthy balance where government will create regulation to recognize innovation and we are nimble to be within that legislation, I think we'll all do fine, right? We don't want excess on either side, right? Otherwise it can lead to catastrophic outcomes. So I just think that balance is the best thing that we need.
Vineet?
Government is doing a great job on net zero. So I expect two things, probably policy consistency is must, which they are doing right now. And second is to build port-based economy. Currently,
port.
Port-based. So actually, we lack infrastructure on port for industry. And if we have to be successful in making India for the world, we need ecosystem at the port. Like even at JNPT, if you need a 400 kV connectivity or 220 kV connectivity, they don't have. Because the industry has not come up at the port yet. And they haven't built the entire infrastructure, or if you want to set up a large industry, they don't even have land in the SEZ.
Sorry, so you mean power lines?
Power lines, because if you are setting up a large factory, you need to evacuate power lines at a certain voltage, which is currently not available. So land is not available, other infrastructure is not available. So if India has to become developed nation, I think the path goes via the port, and water port-based economy has to flourish, and a lot more investment needs to go into that sector.
With regards to power, you can have a word with Harsh later. Mr. Thiagarajan, what's on your wish list?
See, if you plot the growth of every economy that has grown, whether it is Europe or it is North America or it is Japan, Korea, China, there is a clear correlation. There are certain lessons to be learned. Number one is the R&D and innovation. That is some focus has begun, a lot of work to be done. Second is, in the name of Atmanirbhar Bharat, I don't think we should create a ring fence. All economies grew by opening up in a big way. And I think that's what we need to do.
You mean sort of not restricting imports, not having too many restrictions?
No, selectively at least allow the imports to happen, trades out of it, because if you do that, they are doing that side. And you're already seeing some carbon tax and other measures are. So how you will connect with the global supply chain? There are time-tested models actually. Yeah. So and the free trade agreements, lot of things to be done there. And the industry also should come forward. I am ready to compete and therefore open it up. And like I think even in your studio I have stated this. A company like Blue Star has grown basically because of competition. If Daikin, LG, Samsung wouldn't have come, we wouldn't have grown.
Okay, so fostering competition, healthy competition as well. Harsh, what's on your wish list?
So I think I would say two things. One is interministerial collaboration, right? And I think it's substantial change that we have seen over the last 8 years, but still sometimes you experience that they are in silos. And that's something which impacts speed of growth. So that's something which definitely the government can consider. And the second one is really there is a possibility of being overconfident and putting entire risk on the industry, on the private side. So if the right distribution of risk is done, there are certain risks which is government is best suited and capable to take, and there are certain risks which should be with the private sector. I'll give you an example for let's say creating social infrastructure, right? An airport or a port, as you mentioned, or land or land acquisition. These are the risks which are social risk, the social assets. It's best to be taken by the government, and then the split between the private risk and the government risk, if it is efficient, then you'll see the speed changing. Sometimes we have seen that in the over-enthusiasm or confidence, we say, look, all the risk is with the private guys. Fine, you'll have a few $1 billion of capex, people will burn money, and then they'll never come for 10 years. That's the risk we run if we don't do the risk split rightly as a country. So I think that's a balance if the government can think of. Would be.
All right, that's very well put. Gentlemen, thank you very much. All of you, Siddharth, Vineet, Mr. Thiagarajan, Harsh, appreciate you joining us here in the panel. So there are some demands, but I think there is a general level of optimism as well that the private capital expenditure cycle has started, maybe in its infancy, but will pick up steam over the next couple of years. Thanks very much for being with us here. Thank you.
Yes Bank and CNBC-TV18 present the Growth Summit Vision for a $10 trillion economy in association with Max Life Insurance.